For watching Business Today. I'm Neetu Chandra Sharma. This is earnings special, and we will be looking at Q2 FY26 performance of India's biopharma major Biocon. The company has reported a 20% rise in operating revenue to rupees 4,296 crores, led by strong growth in biosimilars, which now make up over 60% of group's revenue, while EBITDA has grown 29% and Biocon Biologics has delivered 25% revenue growth. To talk about the company's growth outlook and global expansion plans, I have with me on the show Shreehas Tambe, CEO and Managing Director of Biocon Biologics. Shreehas, very warm welcome and thank you so much for taking time out for us. So I would like to start off with you asking that what are the key factors driving this performance and how do you view the outlook for the coming quarters?
Thank you, Neetu, first up for having me on your show. And as you rightly outlined, we've had a tremendous quarter, and particularly at Biocon Biologics. It's been the seventh consecutive quarter since we've actually become a fully integrated company. Seventh sequential quarter of growth as well. Year-on-year growth, like you said, has been 25%. But very powerful in terms of its EBITDA performance, which has grown over 40% over last year. So that's also been a very, very strong uptake in terms of not just top line growth, but it's come very profitable. What's really driving this was your question saying what has resulted in this. I want to point out three things which has really underpinned that growth. The first one being our market shares across most geographies have increased. Our oncology portfolio has driven growth in Europe, which is not something that we have seen so far. But we've grown from under 10% to over 20% in key markets in Europe, which has been a big plus that we had said will happen at some point. North America continues to be a strong growth driver. It has remained. We've seen some big tender wins in key emerging markets. That's underpinning this growth, again, sustainable during the course of the year. But most importantly is the improvement in the margin profile, which I want to point out to you and your viewers. You're seeing almost a 400 basis point improvement in the margin profile, in the EBITDA percentage. And that's where you're starting to see the operating leverage playing out, where your revenues have grown, but your cost base is the same. So you are amortizing that cost base over a much higher revenue, and you're seeing a much better margin profile. So I would say that this is really a good indicator of how the business is growing, and it's progressing in the right direction.
Okay, so significant is the US market for Biocon Biologics at this particular stage? And how does the Civica CalRx insulin partnership fit into your broader expansion strategy?
Yeah, I think one of the things that I must say, when we ended last year, we had guided that we're going to be launching 5 new products in the United States or in North America. And we had 4 up until the end of last year. And what you're seeing, even in the first 2 quarters that we've just ended in September, we've already launched 4 of the 5 that we promised to launch. And the 5th one is imminent, it'll come in shortly. So you really are seeing a really phenomenal opportunity that's opening up for us in the US. Now, you specifically asked about the Civica collaboration. Now, that is a pioneering partnership with the state of California, where the opportunity is to see how can we provide affordable insulin glargine to Californians. And this is an initiative of Governor Newsom, who is really driving this to say that can we get a CalRx, which is a California Medicaid branded insulin for Californians who can then afford it. And we've been a proud partner with them, working with Civica to see that we get this exclusive supply and alleviate the costs and the pains that people go through when trying to get access to these life-saving drugs.
So how is the business in other world markets, especially in India and other emerging markets in lower and middle income countries? So considering your focus on affordable access, if you can tell our viewers about these markets in particular.
Yeah. And again, as I said, the focus for us is diversified. Our business, if you look at where we are today, Our business is diversified across regions. In the US, we have about 40 to 40%, 42% is our revenue base. If you look at Europe, it will be 33 to 35. And in the rest of the world, we have 25%. So it's very well diversified, and we've been working with several governments across the emerging part of the world to see that we can bring these life-saving drugs to patients across the world. We work on three areas, which is oncology, diabetes, and autoimmune diseases. And in many countries, people can't afford this. First, we thought it was an emerging market phenomena, but it's a global phenomena. And we've been happy to partner with several countries, including Malaysia, where we have a very large base. Mexico, again, another very large base that we work with the government through a partner. There are several countries in the Asia Pacific region that we work with, where we are able to reach out to millions of patients, over 6 million patients we've supported, and billions of doses of insulins have been served. So there's a big commitment to having 1 in 5 insulin-dependent diabetics, which will have a Biocon branded insulin, and that's something that we're very focused on delivering.
So you have been expanding your portfolio and the new product approvals and launches as you just spoke about. So which therapy areas and products do you think will drive the growth for your company in the near term?
Yeah, no, thanks for that question, Neil. This is very important. We haven't spread ourselves too thin. We believe that the focus should always be on debilitating diseases that can really impact the family beyond just the individual. Cancer, for one, is a therapy like that, where it just doesn't impact one person, but it impacts the entire family. So the product portfolio that we've chosen is to work on insulin, on the cancer or oncology. The second one is insulin. We just talked about it a lot, which again is in a way of another silent pandemic, because it goes on and can again impact you even before you realize that you are it has done far more damage. So that's the second area. The third area is in autoimmune diseases, because there are autoimmune disorders of various kinds, and we want to make sure that we are there, whether it's rheumatoid arthritis, whether it is psoriasis. We want to make sure that these patients have access to these treatments, because these are chronic ailments, and we want to be with them for a long period of time. There's a fourth area that we've entered in, which is ophthalmology, which is again a very specialized treatment where the drug is injected inside the eyeball. Now, that's a very specialized treatment because people who suffer from that kind of diabetic indications suffer from these kind of issues, wet AMDs or DMEs, which is diabetic macular edema or wet AMD. These are things that we are focused on, so they can really have a better quality of life.
So you have a large portfolio of about 10 plus biosimilars commercialized in many markets across the globe. So what is the future pipeline like? And are you also entering into new therapeutic segments besides oncology, immunology, and diabetes, as you just spoke about?
Yeah. And I think that is very important, because while we have 10 products which are commercial and helping patients, we also have more than another 10 or 12 or maybe 15 now with the guidance that the FDA has given in terms of what they expect. Maybe 15, 20 more products in the pipeline. So you may have been working now with a basket of 20 products in the past, but you might have another 5 products that will be there in the basket. So it's a very, very large portfolio, amongst the deepest and the broadest portfolio in the industry today, Neetu. So it's a very, very deep commitment that Biocon has to these therapy areas that we just talked about. I just told you about where the growth is coming from and where the future lies for us, apart from these therapy areas, which is in ophthalmology.
So you have a strong balance sheet and continued research and development investments. So in the next phase, where will these capital allocation will go? I mean, which areas are you looking to allocate your savings and capital on?
Yeah, I mean, we've continued to strengthen our balance sheet. If you look at what we've done, even in this particular quarter, we've retired most of our structured debt. In fact, all of our structured debt, if you were to count the latest closure of the Edelweiss investment. So we had three structured debt investors in the company. We had Goldman Sachs, we had Kotak, and we had Edelweiss. And but we raised funds through a QIP process to see that we could retire them. I'm happy to share with you and your viewers that we are at that end where we've been able to retire all of these. And come fiscal 27, on an annualized basis, you would see a reduction in interest cost to an extent of 300 crores, which just makes things even better as we go into a new financial year. But coming to capital allocation, given that now you have a far stronger balance sheet, you also have retired some of these debt investors. It does give you an opportunity to be judicious in how you allocate capital. We've said we will invest 7 to 9% of our revenues in research and development in our portfolio, and we are quite bang on that target within that range, which will allow us to do more with that, the kind of range that we've set for ourselves.
So I would like to ask you about about the biosimilar segment. So this market is increasingly becoming competitive. How do you plan to stay ahead of the curve, and what is the plan to maintain your competitiveness and differentiation in key geographies? You were asked about that.
Yeah, and again, it's a very exciting segment, so it's not surprising that more competition will get into it because there is now clarity on the guidance, there's clarity on the fact that you may not need a phase 3 trial. So obviously, it's starting to become more clearer that with so many biologics losing exclusivity, biosimilars is where the next growth opportunity lies. But the way we look at it is, even as guidelines evolve globally, it is two things are going to be required. One is the scientific capability to do that, which is what is there with us. But you need to be a fully integrated player, which what I mean by that is you need to have your own development capabilities to develop these products. You need to have your own manufacturing capabilities, and those need to be at global scale. So it's not just a small manufacturing capacity, but a very large capacity that you can replace the originator if you were to in a particular market. And third is you need a very strong commercial platform where you can be with the customers and with the patients to support them, because these products are treated more like branded products than like generic products. So you don't switch them at a pharmacy. You actually are required to work with patients and physicians who need a lot more education on this than just the price part of it. So we believe that that's an investment we made for several years, and that's going to keep us ahead of the competition.
What are your key priorities for the next few years, and what is the outlook for the next financial year? And how are you planning to grow organically, inorganically? If you want to share that with us.
So, a couple of years back, we had set ourselves a three-stage strategic journey in terms of how we want to grow the business, where we said the three stages will first be preserve value in the acquisition that we did. The third one was to consolidate the second one was to consolidate the business, and the third one was to accelerate the business. I think we are at that stage, Neetu, where we are looking to accelerate the business, and which is why you're starting to see the launches come in, which is what I just described. You're also starting to see the margin improvement as operating leverage starts to kick in. And you will start to see the interest costs come down as we retire the structured debt investors. So you're starting to see that initial phase of that growth in acceleration that we talked about. So in my mind, the growth is going to come not only because we've been able to gain market shares of our existing products, or now you call them legacy products, but also there are new products that have been launched. And it's not one or two, there have been 5 which have been launched, and we continue to launch more products in the coming year, which will then drive margin expansion as we go forward, given that there are new products coming in.
Shreyas, thank you so much for all those valuable insights, and it's a pleasure to have you on the show. Thank you for speaking to business today.
Thank you so much. Have a good day. Bye-bye.
If you like the video, do like, comment, share and subscribe.